thoughts about the US economy and Donald Trump's first 100 days as president and the impact on the market, I spoke with Darren Thompson, the Chief Investment Officer at Equity Trustees. Darren, so the ASX back in the black after opening in the red today. What's driving it?
Yeah, well, there's probably a couple of factors. I think firstly, we're continuing to digest quite a good CPI print in Australia yesterday, but also we had a fairly benign lead in from the US overnight. The US markets started off quite weak, but then rallied through to their close to finish slightly up, and we sort of carried that forward into today. And some of the themes that are driving our market reflect those US results, including the aftermarket results of Meta and Microsoft. So as an example, Meta came through and upgraded their CapEx forecast for the calendar year 25, lifting those to 65 to 72 billion. And that's really driven the data center part of our market today, NextDC, which we like and own, and Goodman Group, as well as Digico Infrastructure. All of the DC names, the digital center names have all rallied quite strongly. We also had a few results. So Amcor and also Woolworths have delivered quarterly results, largely in line, sort of low single digit growth. So that's sort of been reasonably steady. And probably the other piece is that as a consequence of the GDP number in the US, commodities sold off overnight, and that's been reflected in our commodity names. So stocks like BHP and Rio have been a bit softer today.
I've gone into detail about the GDP figures with the professor from the University of Sydney earlier today, but I'm still keen to get your idea of where you think the US economy is at the moment and whether or not you think it is headed towards a US recession and whether or not that actually means anything for investors.
Yeah. Well, I'd say that right at the moment, if we look at the data that's been delivered, the first quarter number obviously has quite a bit of noise in it as a result of the pull forward of imports that have impacted that contraction. So we think that consensus numbers are sitting at calendar year 25 GDP growth in the US of around 2%. Probably, I think that's skewed to the downside. So I think there's around a 50-50 chance of the US going into recession by the back end of this year, mainly due to the uncertainty caused to business confidence and consumer confidence as a result of the Trump administration policy decisions. So certainly there's still a reasonable expectation at the moment that there'll be reasonable GDP growth, but I think that earnings and GDP forecasts will continue to be downgraded over the course of this year.
And what's that likely to mean for investments?
It kind of depends. The glib answer, it depends on what you're exposed to. Certainly, I think for commodities, it continues to be a headwind. Both the US conditions and also China, I think, are a headwind for global growth and clearly for consumption of commodities. So certainly that part of the market will, I think, continue to be impacted adversely by those dynamics. And then to some extent, it depends on the tariff regime and how it impacts on individual industries. And obviously, there's a huge amount of uncertainty around how that's going to play out, given the volatility in the administration's decisions.
And as you touched on earlier, we heard from Meta and Microsoft overnight. We're in the midst of corporate reporting season in the US. Have there been any signs or any commentary from such companies about the way these import tariffs are impacting them?
The results are obviously somewhat backward looking. So the results that they've delivered have been quite sound. So I think about 40% of the US corporate community is reported now, and they've slightly beaten estimates to date. And at the moment, the commentary is that they're not seeing it in their current conditions impacting. And indeed, part of that's probably because of a pull forward of demand, but they certainly are cautious around the outlook. So management teams are very cautious around how it's going to play out for the remainder of 25 and beyond. So it's not being impacted. They're not being felt yet, but there's certainly awareness about what the impact will be over the course of the year.
The GDP figures out of the US also coincide with Donald Trump's 100 days in office. I want to talk about that in a few, if we can, for a few moments, because Donald Trump has often lauded markets rising in his first term, yet we haven't heard much as it's coming down, right? So the S&P 500 in the US fell about 7.2% in his first 100 days of office this term. It also did hit a record high in that time too, but in his first term, it rose around 5%. So how would you describe Trump's 100 days as president so far in relation to the way he's impacted the markets? Because I think he said today also to business leaders, hey, give me a bit of time because the tariff policy is going to take some time to flow through.
Yeah, so that 7.2% decline in the first 100 days is the third worst of any president. I'm sure he's not particularly proud of that fact. But I describe the first 100 days as being somewhat chaotic and leading to heightened uncertainty. And certainly markets really hate uncertainty, and that's what we've seen in terms of the the volatility in policy decisions. Obviously, the tariffs being the predominant one, but whether it be the degree of cuts to in terms of government personnel, as well as just broader geopolitical policy, it's been characterised by volatility, and markets generally don't like volatility. So you referenced the fact that the market had hit a record high. It's obviously still down 7%. So that reflects the extremes that we're seeing. And I think, to be honest, you'd be very brave to say that there's any high degree of certainty about what's coming next. I think we'll have this sort of environment where you're getting both positive and negative news flow, continuing. And no doubt we'll hear talk around trade deals. We'll hear talk about income tax cuts, all of things which were positive for markets, but interspersed with, I think, ongoing negative news flow as well around tariffs and trade and economic growth.
And finally, given all this volatility that you've just mentioned, what are you telling investors at the moment? What are you telling your clients at the moment? And are there any opportunities at the moment?
Yeah, well, generally, most of our investors have a long-term investment horizon, and it's really hard to make two good decisions to time markets, when to get out and when to get back in. So generally, we're telling our clients that you've got a sound long-term investment framework. Stick to that. Around the margin, we are somewhat defensively positioned, reflecting those views that I referenced, that we think that there will be declining growth and earnings downgrades. So we are underweight equities versus those long-term targets and a bit overweight cash to protect capital, but we're looking for opportunities. And there are opportunities that arise from time to time. I mentioned the fact that, as for example, data centers, the sector had got sold off quite aggressively. We took the opportunity to upweight that within our portfolio. So it's around, I think, staying the course in terms of your strategy, being somewhat defensively positioned, but looking for opportunities where certain segments of the market are sold off.
Darren Thompson there, the Chief Investment Officer at Equity Trustees. Don't forget to give this podcast a review or a rating on Apple Podcasts or Spotify, and to click subscribe.
This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice, and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.
This SBS On The Money podcast is provided for informational purposes only. The content on this podcast should not be understood as constituting advice or a recommendation. It is not personal advice and does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.